Good evening. Welcome to We Mean Business. I'm Anisha Nair Dhawan. Gold prices seem to have fallen off a cliff, with international prices slumping 13% in 2 trading sessions, the worst two-day loss in 30 years. Though it has rebounded from the lows, today is the decade-long bull run in gold over. Should buyers of gold in India, the biggest importer of the commodity in the world, also hit sell button? To discuss this, we are joined by Chirag Mehta, Fund Manager of Quantum Gold ETF. We'll also be joined by other guests in our studios. Let us start with our discussion. Chirag, before we get to what investors should do about gold, what do you think has precipitated this fall, sharp fall in international prices of gold?
Moreover, if you analyze the fall, it's largely a technical-led sell-off that we are seeing in gold, with stop losses being triggered, margin calls, pressure, and that's the main reason for the fall. Fundamentally, if you were to diagnose the fall, it's likely a reason for a deflation scenario panning out. If you see the fall is accompanied by a sharp sell-off in all commodities, and the bonds also signifying a deflationary kind of scenario with yields going down. I think that's the main reason I read into the gold's fall. And another reason being talked about is the Cyprus gold sale. Cyprus is just 13 tons of gold, and it's a very small quantity to be absorbed in the gold market. But the template that is being used for Cyprus may be extended to other European countries as well, and that could be the reason why people fear that there could be more supply coming in the short term, and that is why there has been a selling. So fundamentally, both the reasons are very short-termish and nothing to scare for the long-term prospects for gold, and it's more of a technical selling, liquidation, triggering more. So it becomes a self-fulfilling prophecy in some sense, and that is causing the fall in gold prices. So as far as the fundamentals go, we do not worry about. I think these are good levels that gold has got into. And if you analyze the fall, in this bull run itself, we have seen several falls that have come in, and to the magnitude of 20 to 30%, but that hasn't hampered the gold's long-term prospects. Even if you analyze the 1970s bull market, we saw some 400% rally initially in the 1970s early part. Then we saw a correction to the tune of 44%, and then gold prices rallied by 700%. So it's not that bull markets do not see any kind of sell-offs. This is just one of it, and it's more of technically triggered a bearish kind of environment, a couple of negative news coming in, and that's causing the fall. So fundamentally, nothing to worry about it. Long-term investors, good time to get into.
All right. Let's also welcome in Stephen Pope, Managing Partner of Spotlight in Ideas. He's joining us on the phone line from London. Stephen, we have a fund manager here who says that the long-term prospects of gold remain good. Now, we want to understand what has triggered this sudden fall in international prices of gold, because over the last few years we've seen that easy money has led to a rise in gold prices just after the Bank of Japan announces a huge easing, which is nearly twice the size of what the US Fed is doing. We see gold prices crash. What's happening here?
I think what you saw through the course of the last couple of days was that the economic data from China was not as strong as one would have hoped to have seen. Plus also, we know the Eurozone economy is in a dreadful state. The recent PMI data and unemployment shows that. And US economy, whilst it is still growing and the readings are indicating expansion, they again were lower than was expected. So it suddenly seemed to be that the world got very jittery and panicky about the ongoing strength of the global economy, and was there real traction, particularly in the developed world. And then you couple that with this notion that maybe starting with Cyprus, they have to go and sell at least part of the 13.9 tons of gold that they hold. It started making people think, well, if they want Cyprus to do this, what happens if we start questioning Portugal and Ireland, who had extensions on their loans, then maybe even Italy, because Italy holds just over 2,400 tons of gold. Suddenly this could be a lot of pressure to bear on the market, and that's why I think you saw this extreme move yesterday with the decline of 9.25%, the biggest decline that we've seen in almost 2 years.
Right, but Stephen, just the rumors that Cyprus is selling gold, is it good enough to trigger such a fall? Because there are lots of conspiracy theories doing the rounds that the reason why gold fell so much was because the technical stop losses which are triggered by a particular fund which had huge amounts of naked shorts wanted to drive the prices down, and that led to a cascading effect.
Well, certainly if you do have a sequential run of naked short positions, they can create trigger levels that cause this tipping point to happen. And I think certainly once we were going through, the level of 1,500 was critical. Once we'd broken that, don't forget we'd had some, support and resistance work around that back in May of 2011. Once that was lost, the downside slip was quite dramatic. I feel to an extent it's been overdone. I would be very careful about going straight in at the moment because I think we are in a volatile environment. So if you do enter now, hold very tight trading stop losses. The world is going to be full of conspiracy theories, and once again, you'll probably hear claims that naked short positions is wrong. It's not wrong. It's part of the market's functionality, and it's what gives clarity to the market direction. Because if the naked shorts caused the 9% fall yesterday, then those can be reversed, they can be covered, and we can have equal bounce back. So you've got to take into account economic data, possible central bank selling, and then this trading technical strategy. But generally speaking, I think we can dismiss too much of a conspiracy theory, because once people have made their money, they're not going to hang about and just watch it evaporate. They'll be back in thinking we can buy up this stuff at cheaper levels.
So you don't think that there is any cause for investigation anywhere, because it's just too coincidental. Just a few days ago we heard of a Fed minutes being leaked before they were to be officially released. There are rumors that a hedge fund is going to go belly up, and then Goldman Sachs comes and says we've cut down our target for gold, and 2 days later gold starts to crash.
Yeah, unfortunately Goldman Sachs carry a very high level of influence, and when they say something, it can happen. I certainly feel that if we want to be very basic about it, it's a question of having this idea that central banks in the Eurozone are going to be obliged to start selling, gave people something to talk about and think about. Now, quite frankly, the idea of Cyprus selling its gold, when at most at market rates it's going to raise just under €500 million, when they have to themselves raise 13 billion euros, it's irrelevant. Why would they do that? Italy would only cover 5% of their outstanding debt if they sold all the gold. Far better for the distressed nations in Europe to use gold as collateral as against just openly selling it and then forcing the price down even more. So I wouldn't be at all surprised to see that we do get some gradual recovery upon the spot prices of gold and the other precious groups. However, I think we need to be a little bit cautious about where gold goes to right now, because gold-silver ratio has tried and failed again at the 60 level. So I think once again we need to be cautious. But I'm not buying into conspiracy theories, because you can lift any particular paving stone you like and you'll find a conspiracy theory. So I don't think we should get paranoid about this. Markets go up and markets come down.
All right. Chirag, Stephen doesn't believe in the conspiracy theories, and you feel that long-term fundamentals of gold remain good. But over the last 6 months, we have seen redemption pressures for ETFs. These are funds that invest in gold, and it is actually paper gold, what people say. So for those who have invested in paper gold, is there a cause to worry, because they're not holding physical gold?
If you see paper gold, it's just a name to it, because each and every paper gold unit is backed by physical gold. So it's real physical gold lying or backing each gold ETF unit. As far as gold ETF holdings go, we have seen some liquidation on the ETF side globally. The holdings have been down, not significantly, but just about 10-15% from its peak. And that's not an alarming sign, because what investors have gone out are largely hedge funds and total return guys. And from that perspective, they will move into an asset where relatively they will find more return opportunity. So if you see, there were some compelling investment opportunities there, like take Japan for example. The way the central banks was acting and announcing its policies, the stimulus measures, it was very evident that to be in the Japanese market was a win-win situation, be it the currency or the stock market. So these guys would have moved to those kind of asset classes where they would have sought more returns. So liquidation not alarming. Some liquidations can happen because prices have reached or increased for 12 straight years. So all those longer term investors or the short term guys who are there may have liquidated some portion of their portfolio. Also, when the portfolio rebalancing comes in, gold having 12 straight years of gains, and now portfolio rebalancing may have sought some decline in holdings from a portfolio perspective. So from the gold ETF redemption perspective, longer term investors like 85%, as I said, are still in there. So longer term investors will look at buying into this market. Maybe not at these levels. They'll want the markets to stabilize at some point of time and then buy into. So because no one can predict the bottom, where the bottom's going to be. So they'll wait and watch for the market to consolidate at these levels and then get into. So nothing worrying from that issue as well from a longer term perspective.
Right.